Hey everybody, this is Osprey from mychartcoach.com, and we're going to take a look at some of the penny stocks. Some of the these are the small caps that were in play today. So I'm going to show you some different chart setups. And first up is ticker symbol HTBX. So this did end up closing up 95% today. So this was huge follow through. This was a stock that was alerted yesterday in our chat. People were on top of this, and so yeah, that was nice follow through today. Congrats everybody. You've got RSI here at 87.50, so it's pushing really hard, and Fasto's at 95. So yeah, it's pushing super hard. You can see down here it had a giant volume spike, 22 million shares traded. There was a big gap up open today, and so now there's a space between high of day yesterday, that's the top of this candle, this upper wick, and low of day today, that's that lower wick. So you know, if this currently the share price came up and it hit this red line, which is the 200-day simple moving average, it closed right at that level at 417. If that level fails to break, you can see it's also lining up with resistance from over here in January. If that fails to break, then you could see it, the candles pull back and fill this gap. If that happened, if you see a pullback, since this candle is floating above the upper Bollinger Band, what you'd want to see is this 100-day simple moving average down here at 270. You want to see that level hold. If it came down there and hit that level, that would fill the gap. Okay, and to the upside, if it breaks out above this, you know, 420, you know, this key resistance zone here, gets above this 200-day simple moving average, then what you're looking for is a possible gap fill from over here. If you look at November, you could see that between, it's up in the upper left-hand corner, you've got the low of day on this candle and high of day on this candle. There was a gap here, and if you look right here, the gap did not fill. It looks like it didn't fill right here either. I mean, it's a fractional gap, you know, but there is a little bit of space still there. So if the share price did break above that 200-day simple moving average, you'd be looking for a gap fill and then a run to that 300-day simple moving average at 527. That'll be a tough level to break. And so just keep in mind, if you get chasing and you know, that there's gaps on the chart and candles are forming above the upper Bollinger Band, at some point, you know, that those gaps are likely to fill. And so yeah, just keep that in mind. Yeah, so this was a sweet move. And so check out the and you know, this was actually a chart that we that was posted yesterday in our chat. And so, like, I posted this chat showing that this gap had filled. There was a gap down here from end of March and beginning of April. And so when this candle broke above, that filled the gap. And so what we were looking for yesterday was a close above the 50-day simple moving average. And so that did happen. And so that was a signal that there was more upside potential. As you could see here, that there hadn't been a close, you know, the entire 2018 above the green line. And you have to go off this chart. So you can see here, it got tested here and tested here. When you have a major resistance level like the 50-day simple moving average and there's finally a close above after months of trading below without breaking, usually that signals the stock wants to head higher. It doesn't always get a giant gap up and a 100% move, but it is a signal that there's more upside potential. And so that was nice follow through today. Just keep in mind the stock has a very low average daily volume, and so, you know, with Fasto up here at 95 and RSI at 87, there's not a lot of juice in the tank, so you have to be looking out for a climax spike. Okay, if you look here, you know, which today's volume, you know, could have been a climax spike, but it was pushing higher. It is interesting. If you look here, there was no volume back on the 26th and 27th. You can see there's no volume, but check out the Bollinger Bands. They were super tight. This is the upper Bollinger Band and the lower Bollinger Band, and look how tight they were right here. I mean, you could just right in between the candles. That signals that a move is imminent. And then when you get a breakout above, that's your big clue that it's ready to head higher. This candle right here was your big clue. It broke above all the moving averages, and it was forming above that 300 simple moving average, and the candle started writing EMA 4. This was your signal to enter. There wasn't much volume here, so when this volume spike came in, this was your clue. Okay, yeah, finally there's volume coming in, and it broke above the moving averages. Okay, it's showtime, and so people loaded up, and you know, and then today, what you have to watch out for is there was this giant volume spike at the beginning, and so there's the big gap up followed by the volume spike, and then, you know, they did you know, kind of fade it there. You know, it went sideways. It did push again into the close. but you need to watch out because the big volume happened right at the open. This could be the the climax spike if it fails to break that 424 resistance level. You could see here the closing price at 3 o'clock is the big level to break. If it fails to get above that level and then the middle Bollinger Band here at 387 breaks, that's the dotted purple line that's been holding the entire time during the run. That would be a bearish change in trend, and then you could see a drop down to 350 and then possibly a drop down to that 50 simple moving average at 282, or if you came down all the way down to this 265 level or zone, that would fill the gap. The top of this wick here represents the gap. There's a gap between high of day on this candle and low of day on this candle, okay, because this is the low from today and the high from yesterday. So that's what you have to watch out for on these kind of moves. But congrats to everybody that played that today. That was an awesome follow through. Good job. Okay, now I'm going to kind of cruise a little bit faster through these other ones. This is ticker symbol VVUS. You can see it closed up nearly 47%, and so this made a bullish move today above the 50 and 100-day simple moving averages. It started off really on light volume, and so the volume did pick up as it got started pushing through the day, and it ended up closing with really big volume. So I am impressed with that volume spike. You have to watch out for the climax though. It did come up here and hit this high close level from the 12th of March. It has to break that level to head higher. If it can get above this high close level, then the 200-day simple moving average at 676 will be on deck. Now if it fails to break resistance here and you see it starting to pull back, what you want to see is the 100-day simple moving average at 46 hold. Recognize here that it did close well above the upper Bollinger Band. The last time that happened was right here, and the candles did work their way back into the bands. Okay, let's look at MTNB. Okay, closed up 35%. It's heating up. It's coming off of RSI is coming off of oversold levels. You have Fasto back above 50, and so this has been in a nasty downtrend. So it's a really ugly chart. It keeps on failing to stay. It failed to stay above the middle Bollinger Band here. They pulled it back, and then today there was a volume spike. This is a thinly traded stock. If this is your cup of tea, this is my penny stock video. If it gets above the middle Bollinger Band at 64, that'll be a clue that it's heating up. It could go sideways like it did over here, but if it was to turn that level into support, what we'd shoot for is for a run up there to the upper Bollinger Band and to the 50-day simple moving average at 84. You can see it worked its way to that 50-day simple moving average. Last time it even ran up to that 100-day simple moving average. So now that it's pulled back and you've got volume at the bottom, and it looks like so you have the multiple red candles in a row, and it looks like bullish one white soldier reversal pattern did form today, and so you'll be looking for bullish reversal confirmation. Okay, let's look at FCRE, closed up 34% today. This caught my eye a couple of days ago here, when it broke above this, when it had this big volume spike. All right, so when it was moving, what was that, last week, and it had this move, but it was such a thinly traded stock, and it just it just was not a pretty looking chart, and there was this long upper wick, and then and then that red candle followed yesterday, and then now you have today this follow through, which is kind of interesting. They jump back in here and they pushed it higher, and so the key level is this 120 level. That was the high close here in December. If it could stay above 120, then you're looking for a break over here above this 135 level, and then over here the high close on the 16th of October. All right, so that's the big level to break. If it can close above that, then that'll be a signal that it wants to head higher. This is a thinly traded stock. If it fails to hold that 300-day simple moving average at 115, the candles could work their way back in the bands. If you look at the long upper wicks on the candles, that does represent profit taking, and so you get the you get a spike down in accumulation distribution. You could see here. So it spiked down, and then you got the spike back up today on the big push higher. So yeah, this is interesting. Yeah, so I did want to show you though real quick, if I put on the weekly chart, because this is breaking out, and so I had to use a 9-month chart. So when that happens, I like to go out to a weekly chart to find the key resistance levels, and so this is a 2-year 9-month chart, and so each candle on this chart is 1 week of trading, and so you could see here this is making a big push. And so this kind of cleans up that last chart, you know, since it was such low volume. And so you can see now the big level to break. If it can close above this gold line, which is the 100-week moving average at 133 for the week, that would be super bullish. If you look back here in 2016, it ran up to the 100-week moving average, it closed above, and then it pulled back, and then that really long downtrend continued. And so, you know, is this going to be the climax again, like back in 2016, or is it finally going to turn that 100-week moving average into support, close above, and break out higher? You know, it has big volume down here, so that is interesting. So yeah, keep an eye on this play. All right, let's look at AVGR. All right, so this is a stock that got alerted in our chat today. It closed up 25%. RSI closed above 56 here, so it's heating up. And so what's going on in this stock is it had been in this very tight sideways channel. I talked about that a little bit earlier on that 15-minute chart, and this chart here is a daily chart, and you can see this is the lower Bollinger Band, and this is the upper Bollinger Band, the two solid purple lines, and that dotted purple line in the middle is the middle Bollinger Band. And you can see that the candles got super tight here in this really strong channel. And when that happens, you either look for a breakdown, you know, down below that lower Bollinger Band, signaling that it wants to head out to, you know, break down to the downside, or you're looking for a break above. And so it pushed today above that upper Bollinger Band. You can see the upper Bollinger Band's hooking up, and it closed above the top of the channel, the 2-month channel, which is right here on March 19th. So that close above is signaling more upside potential. Now it needs to break this closing price over here from back in February. It needs to get above 150. If you see it break above 150, then the target is the bottom of the gap up here around 180 or so, that 180, 190 zone. If it can get, you know, that the bottom of the gap is always going to be tough to break, but it could make a run up to that level if it can get above 150. Now if it got above that bottom of the gap level, you'd be looking for a run up to 250 and a gap fill. Now it is at the top of the channel if you go back here into February, you know, the very start of this channel, and so it has to break above 150. If it fails to, it's at the top, and then it could keep going sideways. Now what was interesting to us was the close above the green line here. That's the 50-day simple moving average. I mentioned that earlier. You know, you could see back here in January it tried to close above and it failed. So this is the first close above the 50-day simple moving average in months, the first time in 2018. And so to us that's a signal that the stock is in play. And now it has to stay above that level. That's the stop loss level. If it could stay above 126, the signal is to ride if you're a longer term swing trader. But it does have to break above 150. Okay, so and it will be a risk to hold if it does drop below support. Okay, let's look at MCEP, closed up 9%. All right, so this is another ticker symbol that we've been alerting quite a bit, and it keeps pushing higher. So if you look up here, this is in the energy and exploration sector over here. And so this has been a good sector for the penny stocks. There's been a lot that have been putting together days like this where they're up 9%, they're up 6%, they're up 4%. You know, maybe they take a day down where they're up down 2%, and then the next day they're up 5%. Look at the pattern here. So it got above the middle Bollinger Band back here in April, and then it got above the 50 and 300-day simple moving averages, and ever since it's just been in this really strong uptrend. And so as long as EMA4 at 211 is holding, you can see all these candles closed above that level. The signal's to keep riding. Now once there's a close below, that would be a bearish change in trend, and it doesn't mean the chart's broken, it just means it could consolidate. And what you want to see now is this high close from back here in January. You want to see the candle stay above that. It needs to stay above 195. If it could do that, it should keep pushing higher. You know, it has increasing volume here. Now there was this climax spike looking deal here because you have a pullback from high of day at 245. It's on a multi-day run. Today's candle did close above the upper Bollinger Band. You know, it's on a 4-day run with a spike, and so many times you'll see a red candle following this type of pattern. And so you know, if that happens, as long as EMA4 keeps holding, you know, the signal is the stock's still in play for a longer term swing trade. Now you can now when a stock's breaking out, I always recommend checking out the weekly chart, and this is a good example of why. You can see the key resistance that it's hitting here. Check out this red descending resistance line. So you have 2016 here, you know, the top, and then here in 2017 the top, and then now here you have in 2018. You know, is this going to be the top for 2018? It's hitting that level. You know, this was the high close for 2016. This was the high close for 2017. Now, is this going to be the high close this week for 2018? It's right at the key resistance level. Well, according to our, everyone that does technical analysis theory, if it closes above that level for the week, that should be a signal that it wants to break out higher as long as it stays above that level. So that's what you're looking for now. Is it close above this descending resistance line, and then here's that 250 level. If it can break above 250, that's going to be a signal that it wants to keep heading higher. This week's candle is busting through that upper Bollinger Band, and it is on a what is this, a 5-week run. So if it did cool down and pull back, what you'd want to see is this 100-week moving average down here at 193 hold. If it keeps holding the EMA 4 at 198 on the weekly chart, the longer term swing trade signal is just to keep riding. Just keep in mind, if it fails to break through resistance, let's say it forms a red candle at this level like it did in the past, each time it hit this level, then that would be a signal that it could possibly consolidate. Okay, so let's look at LEDS, closed up 14% today. So yeah, keep an eye on this one. It has good volume. It had the big volume spike with the nasty black candle, and we say that because it formed after a gap up open, and there was a close above the upper Bollinger Band. Down here, that there were black candles, but it was starting out. It didn't gap up higher. It didn't break out above the upper Bollinger Band. It's when you're in a strong uptrend and then you get the gap up above the upper Bollinger Band, and then you have the black candle with the long upper wick, that signals downside risk. And so the candles did work back into the bands, and that's why we say it's just risky to hold when this type of pattern forms during a multi-day run, during an uptrend. You want to look to head to the sidelines. And so, the big pullback came down, hit the 300-day simple moving average and 200-day simple moving average, the red and the blue line, and it bounced, and it made a nice move. And so now it's in the process of trying to fill this gap. There's a gap between low of day on this candle and high of day on this candle. It's almost filled. You can see it's a very micro gap now, just the space between this upper wick and that red line. But what's going on now is a bullish one white soldier reversal pattern formed today, and so we will be looking for bullish reversal confirmation, and then what you want to see is a run up here to this 525 level. If it can break above that, then the recent high close up here at $6 will be the next target. So get above 525. It could run to $6. There will be some resistance here as well at 550. Okay, let's look at CRIS, closed up nearly 8% today. So yeah, keep an eye on this one. It keeps hitting the middle Bollinger Band here. That's the dotted purple line, and failing to close above. It did that again today. If it closes above 0.576 tomorrow, that will be a bullish change in trend. There hasn't been a close above that level since back here on this red candle, and that's when this whole downtrend started. And so if it can get above that middle Bollinger Band, it could run back up to the 50-day simple moving average at 62, get above that, and the 100-day simple moving average at 66 will be on deck. You can see it hit that level. It keeps hitting, that's been the level that it's been running to, so you could get a run back up to there. So keep an eye on that play. It needs to get some volume. Take a look at DNN. This is another one to keep an eye on. It is hitting the 200-day simple moving average here. If it can get above 487, that's the red line here, it could run up here to this gold and blue line, and that's the 100 and 300-day simple moving averages. If it gets above 505 and closes above that level, that would be really bullish. And then it would have to get above this 52 level. That's the recent high close, and break above both of those levels with the close above, and it could get moving. So keep an eye on it. Also keep in mind that this is in a strong sideways channel. And these are just really not pretty charts to trade. It made my radar today with the bounce and all, and it's hitting resistance. But this is the kind of stock that you just rather just wait and see if it can get above 52, and then if it gets above 52, then it might be something worth trading. But it's really going to be a risky trade if you jump in before it breaks above 52, and it's going to be closing above that level. If you load before that, you could get caught in all this sideways action. Okay, when you get the moving averages all stacked above you like that, really close, many times it's just best to wait. Okay, so let's look at AMMA. Closed up nearly 12%. So yeah, keep an eye on this one. This is kind of similar. You know, it's these penny stocks. You know, why do they have the nasty downtrends like this? And it's because of dilution. You know, a lot of these companies are paying the bills by selling shares, and that creates the strong downtrends. And so what happens is you get short cover rallies, and that's where you get a bounce, and then it runs up to the middle Bollinger Band. You know, you get a bounce, it runs up, but then the downtrend continues, and that's a sign that they have bad financing, right? And so this had the bounce and it already had the run, but keep an eye on it. Maybe it'll get above the middle Bollinger Band. If it does at 41, it could run up to the 50-day simple moving average at 51. Just keep in mind that when you have a strong downtrend like this, it's likely to continue. Okay, let's look at ANY, and it could reverse, but these penny stocks, you got to be very careful. New traders really gravitate towards those types of charts, and so just keep in mind it's much safer to trade stocks that are already in an uptrend or starting a new uptrend on the daily chart. Okay, let's take a look at ANY. So this is, as I say that, then I show you a really crappy chart, but that's the way it goes in Pennyland. If you look here, there's a gap between low of day on this candle and a high of day on this candle, and so this is, you know, super ugly. When we have an ugly chart like this, what we look for is to close above the pink line. On my charts, EMA4 is always the pink line, and so it closed above EMA4 last week on Friday, and we did put out alerts on that it was heating up, you know, after all these multiple red candles in a row, and then it formed the bullish reversal pattern, and then now it looks like that pattern could have been confirmed today, but it wasn't a strong confirmation. The big thing that we're looking for now is a close above EMA 8 at 51. If it can get above 51, then EMA 13 at 58 will be on deck, and then it could possibly run up to the bottom of the gap. That's now lined up at the middle Bollinger Band at 67. So there is potential for some percentage gains if it gets moving above 51, just to run back to the bottom of the gap in 67. It could run back to that level and continue the downtrend. Also, you know, if you look here, the last time it had a nice bounce, it did run to EMA 13, the orange line, and that is up at 58. You know, so there's some percentage gains that could get scalped on a bounce, but keep in mind, you know, this type of play is really risky. You know, if it closes below, anything that closes below EMA 4 on the daily chart is a risk to hold long. You know, it's only in play for the technical bounce if it can stay above that level. Let's look at CVEO. Closed down nearly 10%, and so yeah, I wanted to show you this one because it's getting freaking clobbered. It's down 10%. Now you have RSI below 30. It's at 25, so it's super oversold. And then you have Fasto down here at 5, so extreme oversold, major bearishness. It's down. Look at all these red candles. It's down 6 days in a row. It closed below the 100-day simple moving average yesterday, and then that was at 337. And then today it broke through this support from over here in February. That this green line is that key level that it needed to hold, and it closed below. And so now what you're really looking at is a drop down here to this red and blue line. I think if it comes down here and it hits 273, that could be a nice a technical bounce play reload level. There is an unfilled gap way up here, so I have no idea what the story is behind this company, and maybe it's going to keep going down forever. I have no idea, but I'm just a technical trader, and so you know, when I see 5 red candles in a row, it's a good technical bounce play setup for a quick trade, and so when you see more than that, 6 here, you know, that makes it more and more likely that a white candle is going to come sometime soon. And so what you have to do is, you know, the best thing to do is to trade off the intraday charts, and then I like the 15-minute chart. Once the middle Bollinger Band and 50 simple moving average turn to support, then that's your signal that the bounce play is in progress. It has to come down here and hit this. It doesn't have to come down and hit this, but if it does come down here and hit these levels, I think that could be a setup for a bounce play. Okay, let's look at FUSZ. Closed down nearly 19%. So I'm going to show you this one over the counter because a lot of people have been trading this in our chat while it was like heading higher. It was a nice money maker for everybody. You know, people did really well on this run down here. You know, it ran all the way up. It had the huge move, and then it, you know, bounced, and people loaded off of $1. You know, we had you know, lots of people have been talking about it, and I know some people did really good trading off that dollar level on the bounce. They played it perfect, and then it came back up and it broke above resistance and it headed higher, and then finally it cooled down. Basically on the 23rd, it started breaking down, and then here on this candle, when it got below EMAs 4, 8, and 13, that was your red flag. Okay, that it is correcting, and then it has to hold the middle Bollinger Band. As you can see here, that had been holding, and it did break, and so when that broke, the closest level was this green line here, and so you want to shoot for that 50-day simple moving average if you can get it, and I did put out alerts on that was the reload level, and you could see here on this red candle that wick hit exactly on that level and it bounced, and it did have a technical bounce the next day, and I did put out alerts on this candle here that this was the target, and it did bounce, and so yesterday there was the bounce, but the red flag was it didn't get above EMA 4. Okay, now bullish one white soldier reversal pattern did form, but that pattern needs to be confirmed. Okay, and the big thing now on this type of play, once the middle Bollinger Band breaks, is it has to get back above that EMA 4. If you look over here on the drop down here, it formed the white candle, the reversal pattern. This was bullish Harami, and then it confirmed it on the next day. Okay, and so here you have the white candle with the bullish reversal pattern, and then you have the red candle. Then finally it confirmed on the third day, and so that's what you're looking for here. You're looking for confirmation tomorrow. You want to see this confirm this reversal pattern and close above EMA 4 at 146. Once it closes above EMA 4, like it did back here, and like it did right here on this candle, that was a signal that the chart was turning bullish again. You could see the candles started riding above that level. They started riding above that level, and so as long as they're forming below, that's going to signal that it's a risk to hold overnight. Many times it's best just to wait and to see that there's going to be a close above that level, then you can jump in. I mean, you could see here, you could have easily just waited a day or two on each of these trades. You could have waited till this white candle. You could have waited till this candle to see that it was above EMA 4. So I don't think there was a big rush to have to jump in on this candle, even though that was a nice trade, I thought, off of the 50 simple moving average. This was tricky. What happened was, so basically, to clear it up with the daily chart, if it can get above EMAs 4, 8, and 13, what it has to do is get above the middle Bollinger Band here at 182. If it can get above that level, then that'll signal the uptrend is going to continue. If that level remains resistance, that's going to signal downside risk. Right now, it's all about holding the 50-day simple moving average at 121. It has to hold that level. Okay, that's been holding for months. If it were to close below that level, that'd be a major red flag, and you could see a drop down to the lower Bollinger Band at 90, and possibly the 100-day simple moving average at 69. Okay, so it has to hold 120. Now, if you look at the 15-minute chart, you could see here it had that nice bounce off of the support, and then where was that at? That was down here, and so yeah, it had the bounce on let's see, so that would be over here. It came down, bounced off of the 125 zone, that 120 50-day simple moving average zone. You can even see it double bottomed off that level. So it hit it, came up, double bottomed, and then came back up again. And then it was in play the following day, and then it really ran. Okay, this morning. Okay, but then they pulled it back. And getting below the middle Bollinger Band right here was the big red flag. All right, so when it was telling you that the chart was breaking down, when you had the pullback, it needed to hold the middle Bollinger Band. That was, it did hold, but this candle right here was your big huge red flag. That 115 candle. Once it dropped below all those levels, that was your signal. Okay, I got to be on the sidelines. This is breaking down. That's the red flag. The break above these levels right here, when it was below and it broke above, that signaled upside potential. The inverse of that is the break below. When it breaks below, that signals downside risk. And so you want to be long above and short below. And so this is, so basically, if you followed the charts, you were getting out on this candle. If you didn't time the top up here, this was your red flag. So just keep that in mind. It's really important if you're going to trade penny stocks that you follow the charts closely. You can't mess around with over-the-counter stocks. If the 15-minute chart turns bearish, you do not want to be long. I mean, they will punish you in penny land. and so then you end up getting stuck holding the bag. So just in future reference, don't mess around with over-the-counter stocks. When the intraday chart breaks down, I like the 15-minute chart because it's the Goldilocks zone. It's not too, it doesn't signal too early or too late. By the time this 15-minute candle sets, it's a solid signal. And so when that was forming, that was clearly telling you the chart is broken. Okay, so I think some people could have got out without taking a loss, or got out with some profits if they just would have followed the charts a little bit closer. All right, so thank you very much. Yeah, come check out the chat. I'll post the link below the YouTube video.